My partner Frank Garay is going to be hosting a webinar this upcoming Thursday, the 22nd, courtesy of Rimmon, the Real Estate Mortgage Network, about how to get more referral partners and close more deals. No technology whatsoever required. If you want to check it out, click this banner right over there on Facebook right up above. We're going to get a little heavy here today, guys. Now, I've read a number of articles regarding redlining and discrimination that allegedly still exists in the mortgage industry. I've also read a number of posts by frustrated loan officers who live in some of the cities that have been named as the highest offenders of discriminatory lending practices. The post goes something like this: cash is green. Why would I discriminate against anybody? Now, I'm not naming the loan officers because the other posts read something like this. This is a hot button topic, guys. I wouldn't post this publicly, so I'm not going to. However, I'd like to share some misconceptions about race and lending and perhaps shed some light on what I see are the real problems regarding these issues going forward. Now, you might agree or disagree with me. If you disagree, just remember, I'm actually going to try to tackle this hot button issue where most people would simply find too much blowback to continue. So here we go. First of all, at a mortgage lender level, that being mortgage companies and loan officers who write loans, I don't believe discrimination truly exists. Reasons? Well, number one, mortgage companies wouldn't tolerate it because the company's bottom line is more important to all of them, even if they had racist opinions. Understand, your average loan officer does about one deal per month. So for somebody living in an accused highly charged discriminatory area like San Antonio, Texas, cutting off Hispanic borrowers could literally mean cutting a loan officer's earning potential in half. Number two, discrimination would require two sets of rate sheets, one for white people and another for minorities. Now, that of course has never been found, nor will it, because it simply doesn't exist. If it did and was found, it would mean immediate termination for anybody associated with that rate sheet. Further, nearly all Fannie, Freddie, and Ginnie approved loans are approved or denied by automated underwriting engines. So, to determine how discriminatory a company truly is, find out how many loans that get automated approval and then are denied by the lender. Fraud aside, if you can find a trend here, then you would have a case against mortgage lenders and discrimination. Now, that information has never been found, nor will it, and that's because it simply does not exist. When lenders have approved eligible borrowers on file without fraud, they always fund those loans regardless of a person's race. Now, for those who are screaming right now that minority loans are approved, but with higher rates, we're getting to that. So, am I saying that race does not play a factor? Not really, because the outcomes being cited by most articles are in fact true. African Americans right now are not equally represented in home ownership numbers or mortgage terms. The problem is in the conclusions that are being drawn. African Americans and Hispanics underrepresented with worse terms, therefore discrimination. If discrimination existed, it's at a federal government level, and that's where it has always existed. You heard me right. If there is discrimination, it's the federal government. Exhibit 1. Here is a FICO breakdown of average scores by race. African Americans, on average, have scores a whopping 62 points lower than that of your average white person. This is according to FICO, not me. But what's more problematic is the fact that 21.3% of African Americans have scores lower than 620, while the number is only 5.4% for whites. So we need to understand, these are the numbers that ultimately determine approvals and rates for mortgages. It's not at the discretion of the loan officer or even the branch, or really even the choice of the mortgage company or bank that funds that deal. Exhibit 2. Here is a graph of Fannie Mae's loan level price adjustments. This is what Fannie Mae is adding to everybody's rates for everybody who's doing any conventional financing. This, my friends, is truly your smoking gun. Look at the bottom, the fine print. It states A minimum required credit score of 620 generally applies to all mortgage loans delivered to Fannie Mae and Freddie Mac. Refer to the selling guide and the eligibility matrix for additional details. Remember, FICO says 21.3% of African Americans have scores below this 620 number that Fannie Mae just cited, and it's only 5.4% for whites. So off the bat, you have 21.3% of African Americans who will immediately get denied by any lender, whereas only 5.4% of whites. Now, there's caveats here, but this is Fannie Mae. This is not Joe and Jane Lender. The choice is taken out of the hands of the loan officer. It's at a federal level. Now, the second point with this matrix, this Fannie Mae loan level price adjustment matrix. Let's look at a 90% loan to value deal for the average white person and the average African American, again from Fannie Mae's loan level price adjustment matrix. The white person has an average score of 745. So their pricing is at the top of the Fannie matrix. All we need to do at this point, now just follow me here, is align the score with the correct loan to value. And you'll see that there is a 0.25 added cost, 0.25%. Now, the average score for an African American is 677. So we find that rate on the left and then align it with the appropriate LTV, that 90%. The cost is a whopping 2.25%. So understand, this is Fannie Mae, who is under conservatorship of the federal government through FHFA. They set the base price. No lender in the country sets the base price for a loan. The government does through FHFA to Fannie Mae and Freddie Mac. According to them, not me or any lender, not even the big guys like Bank of America, Citi, Chase, or Wells. No, it's the government. They say it's going to be 9 times more expensive for your average African American to get conventional financing than that of a white person. Period. So who's racist? I mean, the truth is, loan to value, credit score, and the ability to repay are all major indicators of risk. So if African American loans are then more risky, then shouldn't they cost more? I don't know. Maybe, but it really doesn't solve our home ownership disparity in this country, does it? Maybe it doesn't even explain what the problem fully is. Now, credit scores determine cost and rate on loans with Fannie Mae, at least in part. Here's a graph on credit scores by income level. The average score for a low-income person, regardless of race, is 644. The average income for just a middle-income person is 753. That's right, guys. That's an 89-point spread from low income to just middle class. That's a larger spread in average credit score than that of whites over African Americans. This suggests that the problem is more economic than ethnicity. If you're poor, chances are you have a lower score. Based on the Fannie loan level price adjustment, you're going to pay 2.5%, or a whopping, astounding 10 times more for your loan than the average white person. So what do we make of this? Well, one, there is a problem with home ownership rates and mortgage terms with minority groups. However, the biggest problem wanting homeowners have is being poor. The problem is not with mortgage lending or lenders. The problem is just way bigger than that. The problem is with the outcome. The rate and ratios are institutionalized and unchangeable by banks, lenders, or originators. You heard me right. The problem is institutionalized and unchangeable by banks, lenders, or originators. So we should not blame them. It's with the system set up as it is right now. With the information that we know and use, there is no other possible outcome than what we currently have. That being minorities owning homes at lower rates on loan terms that are higher. So if we want to fix the problem, tell all these advocacy groups out there that do all this reporting to quit looking at lenders. They're not the problem, and start looking at the system from a federal level. I've shown you all the smoking guns. That's where the problems lie. Well, I hope that was some compelling stuff for you. It's all pretty straightforward. If you agree with this or just think it's provocative enough to share with your other friends, please share it. It helps us out a ton. If you're meeting us for the first time and want to get a daily dose of what we have to offer with a little sales nourishment for lenders and real estate agents, feel free to subscribe up above. And for those that already have, we'll catch you tomorrow on the National Real Estate Post. Bye.